Hey, everybody, welcome back to another edition of Market Talks with DrStoxx. This is Dr. Tom Carr coming to you from the live trading room of DrStoxx.com. That's DrStoxx.com. And if you go to our website, you want to join an amazing crowd of traders from all levels of experience, from the very, very new newbies to the long term experienced traders like I am who trade for a living, and everybody in between. Go to the subscribe button. Go down to the live trading room, click on there, and you'll be good to go. And if you want to join us at a discount, both rooms, the options room and the stocks room, you can do that by clicking on either one of these buttons, and then we'll lead you through the steps to get you on board both rooms at the same time. All right. Well, we've got an interesting thing going on in the market today. So let's get to our indexes. And we're going to talk this morning, or this afternoon rather, a little bit about how to spot a good mean reversion setup because we've got one going right now. A little bit of squirrely movement this morning during the Trump presser. We got a little bit of a down open, and then it kind of went a little further than that for about the first 3 hours of trading today. But once the presser stopped and he didn't say anything that the market didn't already know about tariffs, we're now starting to trend higher. We took out Friday's highs. We have already taken out Wednesday's highs, and we're trading on top of the recent bottoming trading range, and that's exactly where we want it to be. This is a good spot. It's not, a back up the truck, mortgage the house, sell the kids, and put all the money into stocks moment just yet, but we are very close. We are very close, closer than we've been for a year, to a major, major buying opportunity. Not the kind that will get you, life-changing wealth, but certainly the kind that can improve your return on equity very, very fast and very nicely. All right. So if you want to join us for all the stocks that I'm trading, go over to the live trading room and you'll be good to go. And if you're interested in options, join the live options room or join both. Okay, so let's talk a little about how to spot a mean reversion setup. So, generally speaking, the theory is this: the market moves both up above and down below basic moving averages. Bullish, of course, movement is above the moving average, and bearish movement is down below the moving average. And for the most part, probably 70% of all trading is done in a pretty narrow range, both above and below any given moving average. You can talk about the 21 EMA, that's the one like to use for short-term swing trades, the 50 EMA for intermediate term, and the 200 for long term. I'm not so sure we're just yet at a long-term mean reversion setup, but we certainly are at an intermediate and short-term mean setups, and we're starting to see these play out already. Right? We only triggered them on Friday. Here it is Monday, the very next trading day. This is the 17th of March. Happy St. Patrick's Day to everybody. And we're already seeing follow through. We're all seeing a confirmation. All stuff is good, pointing higher. Now, lots of caveats there, lots of disclaimers. We're going to run into some pretty significant resistance soon. That's probably where things will stop and they'll start to get a little squirrely and roll over and maybe give us a bit of a scary drop or two. But no new tariff news. And I think the bottom for this quarter at least is in. Okay. So how do you spot a mean reversion? Well, let's take the 50-period moving average because the mean reversion setup that we had on the 50 is one of the best ones that we've seen in many, many, many months and maybe even years. In fact, I can't find a better mean reversion setup than the one we got last week. And I went back to at least the COVID bottom, the COVID crash, which gave us one. And I haven't seen anything like this since then. All right. So in order to get this, in order to really do this scientifically, we have to put on an additional indicator. And the name of this indicator, if I have it here, and I don't have it here, I did not save. All right, so let's look it up. You type in mean reversion. No, I'm sorry, that's not it. You type in distance from moving average. There it is, distance from moving average. Take this one to the top. It has 958 downloads. That's the best one that I've used. And what you're going to get is an indicator down below with a bunch of bars, right? Histogram. The bars hanging off the zero line from below, hanging below, and then you've got bars on top of the zero line. And that, of course, is, the bars on top is the price is above the moving average, bars below, prices below the moving average. And I like to fiddle around a little bit with the settings of this. So I first changed the length from the default 20 to 50. I'm only interested right now, at least, in these intermediate setups. I changed EMA to SMA, and that's it. That's all I'm going to change. Okay. So now the bars are showing me distance away on a percentage basis from the 50 period moving average, not the 20. The furthest we got on this pullback, and this was a 4-week pullback, it was over 10%, just over 10% in the S&P. It was closer to 15% for the NASDAQ 100. And on the S&P, we'll just do this one. The furthest we got was about 8.8, let's just call it 8%. 8%. So 50 period moving average is up here. The price extended on a closing basis, not an intraday basis, closing basis, got 8% below the 50 period moving average. That is a significant stretch between price and moving average. Now, is that significant? Yes, it is. Why? Because the moving average is an average of the last 50 days of closes on the S&P 500, and that's a pretty good peg for what the market is understanding the value of the S&P to be, right? That 50 period moving average, whatever the current level is, that's what the market has valued the S&P over the last 50 trading days, roughly the last quarter. If we're 8% below that, do you think we're likely to be undervalued? Yes, absolutely. Right? For the last quarter, the market's, let's just give an arbitrary number. The market has said the S&P is worth 5,000. Well, we're now 8% below that, and we just dropped very quickly underneath that level. Do you think we're at a overextended, undervalued level? Yes, chances are very good that that's happening. Now, let's combine um, this difference indicator. I don't know what else to call it. The distance indicator with deep oversold levels of the RSI. This is the RSI default 14 with a 10 smoothing period overlaid. We went below 30. That doesn't happen very often, especially in the S&P. Yeah, it happens in the Nasdaq maybe once or twice a year. It doesn't happen in the S&P that often, really that often. So what we want to do is we want to go back and find other levels where it was around 30 on a nice pullback and see what was going on in the distance indicator, okay? Here's one right here. This is the August low, tagged 30, did not get below. So we were, the right edge where you got well below this level. The lowest that the distance indicator got was 5.25. We were at 8, right, last week. 5.25 this week. Was that a major bottom? Yeah, you bet it was. You bet it was. That was a very nice time to buy long stocks. Not only did it snap back to the 50 period moving average in just a few days, it was so strong it went above the 50. Then it came back down below and then right back up. And then it was a beautiful, beautiful, beautiful uptrend all the way to the top of the all-time highs. So August lows, everything was lining up just the way they're lining up now. Only ours are more extreme than the August. And August was a great time to buy stocks. Let's find another one. Here's another dip. This is the April dip. Back down to the 30 period, still not as deep as we got. The the distance indicator only got to 3.6. Was April a good time to buy stocks? Yeah, you bet it was. Back down here around 5,000 even, got all the way up to 5,700 on that oversold, undervalued extension. Are we more extended now? Are we more undersold now than then? Yeah, absolutely. Here's another one. This one did dip a little bit below 30, maybe to 29, and the distance indicator got down to almost 6. So this is our lowest point since the one we're at now was the October low, which was pretty much the last leg of the 2022 bear market. October 23. Was that a good time to buy stocks? Absolutely a very good time to buy stocks, right? Snapped back to the 50, held that level for a few days, and then it was just all up from there, all up from there. I mean, that was a beautiful run. And it was so easy to trade, and we made so much money during that stretch. Oh, I would love to have those days back again. All right. Well, let's just do one more. Let's just do one more here. RSI. So we're not seeing, there it is. Okay. So here's a dip that is as significant. This is during the bear market. This was during the 2022 bear market. We got down to 27. It's a little bit lower than we got last week, or maybe about the same. And you can see our distance indicator got all the way below 10. So is it possible for the market currently to continue down lower? Yes, absolutely. Is it possible that we are at the very top and the very beginning of a new bear market? Yes, absolutely possible. Is that going to happen if nothing else changes on the tariff front? I wouldn't say it's likely, but I would say that the odds are probably 40% that if nothing changes on the tariff front and they go into effect and we start to see our prices go up and then their prices go up and we start to see uh, durable goods numbers come down. They were down a little bit this month, but they were certainly up over last month. And yeah, we could trickle down into a recession. And if we trickle into a recession, yeah, we're going to see at least a short term bear market. But I don't think the here's the deal, and I've been talking about this for a while. We're not seeing other indicators that there is a bear market or that one is coming. Right, the labor market is still good. Jobless claims are still low. Consumer sentiment has dipped, but it's not contracting. GDP is still positive, not negative. Um, we've seen the yield curve flip back and forth between inversion and diversion and deflation or whatever, and we've seen rates come down. The Fed is on pause, at least, if not cutting very soon. And so there are all kinds of reasons why we don't need to fear a recession coming that quickly. Don't think there's going to be a bear market anytime real soon. Okay, so mean reversion. Another tool you can use is the Bollinger Bands. I do. Okay, so we put these on. And a Bollinger Band is a standard deviation away from a mean, which is the 20 period moving average. And these Bollinger Bands stretch as price gets further away, and they contract as price gets closer to the 20. And the setup, and I've got a whole manual on this particular setup. I won't give you all the details here, but you want to see prices at a wide stretch. For that, there's a measurement. You can use that objectively. When you get to an X% stretch away from the 20 period moving average in the bands, then we get price outside the lower band, and then we see price come back inside the lower band, and we see certain things going on in volume, and we see certain price levels get taken out. We get a buy signal, a mean reversion buy signal using Bollinger Bands. Now your target here is going to be the mean, which is the 20 period moving average, and that's not too much further north than where we are. We've got like 150 points in the S&P to get to that, back to that mean. I think we're probably eventually going to get up, back, and over the 50 period moving average. Are we going to get there in a straight line the same way we fell below it? No. Are we going to get there over the next several months? Yes. Okay, so we'll see. We trade one day at a time anyway. But that's the mean reversion setup. A couple of tools you can use to detect when it is feasible to go long during those, and the intensity of them. And we're at a very intense one. Outside of a bear market, this is about as intense of a sell-off as it gets. Right? Okay. So let's look at a few charts. We've got now we know that we have a mean reversion setup, a legitimate setup. And let me get rid of these Bollinger Bands. Legitimate setup on the S&P. We've got the same thing on the NASDAQ. And frankly, I still think the small cap index is a no-go zone. Just the downtrend here is too strong. The upside potential versus downside risk is not a very good trade, not a very good risk to take. And so I'm out of small caps, have been out of small caps for a couple of weeks, and don't really want to get back into them. But I do think that especially with the flat linear channel for the NASDAQ and just slightly downtrending for the S&P, I think chances are very good, especially for the NASDAQ, that we've got some pretty decent upside here. So NASDAQ should get back up to the 21 EMA. That is about a 500-point move and 550-point move. And if all goes well with tariffs and things start to scale back and backpedal and all of that, then our next target would be up here, which is a very clear line at 21.2. And that's the 50-period moving average, and it's a former line of support, now resistance. All right, so that's a pretty long upside there. And we don't have to play it with the NASDAQ. We can drill down into some of those MAGs that comprise the NASDAQ right there at the top. Okay, so let's take a look at those since we're talking about them. Worst to best, Tesla is not having a good day. It is off the lows, but only after stopping us out of our little small position in TSLA that we put on last week after it looked quite decent. Oh, Tesla, always breaking our hearts. But anyway, it was it's a pink zone buy in a slightly uptrending LRC after a long pullback and bullish divergence and a breakout on the RSI. There's your breakout right there. Let's get rid of this indicator since we're not using it anymore. And I do think Tesla will still have its day. I do think that maybe the best way to play this one is not even buying shares, but just buying some long-term calls, maybe something for September and something like it around the 300 strike, just to kind of get our foot in the door and give ourselves a nice looking leverage on Tesla. But other than my long-term shares in Tesla, I'm flat for now. Nvidia, so I do like Nvidia. I think this downtrend is just about ready to go. That is ready to be done, and we'll start to see some consolidation in the middle of the range, and then start to see a little bit more of an upside constructive move here. So what I'm looking for with Nvidia is, this was a nice relief rally. We got into the 21 period moving average, hit as resistance along with the LRC midline. Look for a little pullback. You're going to close a couple of these little gaps, but if we can get it down to around 115, 114, then I think we have a pretty good chance of seeing the end of the downtrend. Now, the Nvidia has tomorrow has an investor day. I'm sure what's his name, Jensen, is going to come out. He's going to be very bullish. He's going to be very hyped up about their product lines. There are a lot of headwinds against the company right now, and a lot of uncertainty, and the bearish sentiment around Nvidia is pretty strong. I know it's Nvidia, I know, and if you looked at the weekly chart, you're going to see a nice looking bull flag forming, but I do think it's going to have to consolidate a little bit, print a higher low. I like Avgo, and politicians like Avgo because it's been on the buy list for several members of Congress in recent trading. That's usually a good sign. And it's a big green stick today, and it's outperforming. And we're still in an uptrend, and we're above the 200. I'll tell you what, any mag above the 200 right now, that's a good one. It's because there aren't many. There aren't many above the 200. Let's give that one a green. I'll put it on my greens list. Here's Facebook. It is above the 200. It is an uptrend, and it's just kind of lounging around, not really doing much of anything today. Google is under the 200, and it's under a long-term support line. And frankly, there are better setups out there. I thought Amazon also was very similar. It's just at a major trend line. It's not going any further south, so that's good. The line comes down here underneath these lows, so we are still above that, but we're unable to get above the 200. However, it is an uptrending LRC. We are down in the pink zone, and you know my mantra: buy the pink in an uptrend, sell the blue in a downtrend. And it is one of those, and that's why it's on my green list. Okay, Apple, I don't know. Apple, see ya. I'm not that interested. We are long Qualcomm, and here's the line. Very strong line of support down here around 152. Hit that last week, and while the market was falling, Qualcomm was consolidating, going sideways, and actually getting some pretty good upside to push out those lines of resistance. And now it's bouncing very, very nicely today. So I like Qualcomm. We've got it in our wealth building portfolio. We've got a diagonal debit spread on it for income. It's that kind of play. It's perfect. perfect for the income. I'm not so sure about long-term holding of shares, but we'll see where they go. Cisco has been very strong. Look at that uptrend. We're way above the 200. We are below the 50, but this is about as good as it's going to get among the MAGs. CRM below the 200, downtrending. However, breakout in RSI. That's at least a little bit of hope. Microsoft is a no-go zone, but Netflix is very good today. It got a big upgrade. It got price target raises. Yeah, it's good stuff, and it's in breakout mode, and we are recapturing the 21, the 50, and it's way above the 200, and it's now showing a price breakout. Last week it showed on Friday it showed a RSI breakout. We've got very good volume coming in. Yep, that's your best one right there. So Netflix, Amazon maybe, Avgo certainly, Cisco certainly. Those are the ones you'd want to focus on. Now let's take a look at some greens. So these are setups. Not all of them are ready to go. In fact, most of them aren't, but they are showing some strength of some kind. We were in oil. I got out as it hit that resistance and started to recoil. We did take a small profit on our UCO. It looks like it's really going to ready to go here with this breakout of RSI, but there was geopolitical news overnight that should have spiked oil, and it really didn't. It spiked, but it didn't hold. And so uh, I've had so many stop outs with oil and energy over the last year that I just wanted to take a quick profit and move on. Hack is your cybersecurity fund, and we're in Fortinet, which is number one. CrowdStrike is a good one. Palo Alto is a good one, and it's a very good sector, and it's just very, very, very strong today. Out of the pink zone, uptrending LRC above the 200, about as good as it gets in the recent market. Bitcoin, I don't know. I really don't know. I don't know. So here's a bear flag, and that broke down, and here's a bear flag that's forming, and then we'll see if that breaks down or not. But it's on my zone. I mean, it's on my green list because it's above the 200. It's in the pink zone. It's a slight uptrend, and it is Bitcoin, and the RSI is starting to break. ATAT is a good uh, strong stock from the IBD top 50 list. It is in very good shape here. DraftKings is a pink zone buy signal. It is right above the 200. Very nice day today. Fortinet, we bought that already. DOCS is from the IBD leaderboard, uptrend, pink zone. The only thing is it looks a little bit bear flaggish here, so I'd kind of wait until we get a better confirmation. We're long PLTR in both rooms. We're long the shares in the trading room, and we're in a covered call in the options room, and it's been up and down today, but like the rest of the market, same thing. All the AI plays have been really squirrely today, but I do like what it's doing. It captures, if it can close here, right, get above the 21, above the 50, pink zone, uptrend, well above the 200, it's a good hold, and we're trying to hold. We're hoping to hold. ASTS, we have calls in the options room. It is a wedge breakout today. This is a squeeze play. So small float, lots of shares are short. 28% of the shares are short. It's bouncing off the 50 and is slightly uptrending, well above the LRC. Not yet seeing RSI strength, not yet seeing volume surge. But if this does carry on, especially if we can close above the 21 outside of this wedge, I think you'll start to see those shorts get pretty nervous, because this thing, last squeeze we had went 40% in 5 days. I'm not so sure it's going to do that again, but maybe 20% in 7 or 8 days. I could see that. Upstart is starting to show us a little strength down here in the pink zone of a slightly uptrending right at the 200 RSI breakout. HIMS is, it was way up there, and then it came way down there. And so now we're kind of waiting for it to show us that it is back on trend. RSI breakout above the 10, that's at least a start. We're well above the 200. Nice looking uptrend. Pink zone. I don't know. I'm not going to kick anybody in the pants if they buy that today. Team was getting some good call flow today, and I like how it's holding the 200, pushing off. We're below the LRC, so it's got a long way to go. But fresh breakout of the RSI, I like that setup. We're long app in, no, where are we long app? Oh, yeah, we bought some calls over in the options room. And this is just a beautiful trend. So this is a, a very, very strong software play. And you've got everything going for it here, right? Extreme, big up on earnings. Now it did come way down with the market pullback, and everything AI related was coming down hard. And then we've got this nice mean reversion bounce. Now I want to see where it goes after the 21. If it can get back up above there, then we'll probably look to take profits at 350 around the 50 period moving average. So we're long yen in the trading room, we're long FXI calls in the options room, and it's just doing great. Just doing great. China, 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 China. So that's another thing, right? Steels are falling off a cliff today when they shouldn't if tariffs are a serious thing. And China is very strong, which it shouldn't be if tariffs are going to be heavily laid on China goods. So, yeah, and then I've got a bunch of Chinese stocks, right? FUTU is one of my favorites. And this is one of the better setups here because it still has lots of upside and it's very strong fundamentally. You've got this nice looking wedge going on here. Nice looking wedge. Actually, this would be a good play to do an income spread on because the premium is super, super rich. And it is, yeah, it's about a 20% trading range, pretty typical. It does move. But no, I like this. I like this a lot. BIDU, as I said, way up there on DeepSeek news. You've got NTES, which is a little bit of a pullback to the rising 50 in the pink zone of an uptrending LRC. Sound like a broken record. Stacked MAs, very, very strong company. JD is probably the weakest Chinese name fundamentally, but I like what it's doing today. Right? There's your boomage. And it's 48. It's at 45 now. 48 is probably going to be a limit. Here's your quantum computing fund. So keep an eye on this. I know that we haven't really traded any of the quantum stocks, and my momentum letter has been shorting a number of them. Did very well last weekend, shorting 2 of the quantum stocks, but I like what it's doing today. So it is get back up above the reversal on Friday from the pink zone of an uptrending LRC. Testing the 50 with that kind of momentum on very good volume. Look at that RSI spike. I think that's going to get back up to 86 from 80, and then looking at a breakout. So new thing I just learned about is MAGS, which is a non-leveraged exchange-traded fund that only holds the 7 MAG stocks. So sometimes you think, oh, I need to buy, which of the 7 should I buy? Well, you don't need to decide that. Just buy this one, but you can see it's been very weak on the pullback and not really doing a whole lot of anything today. So I would just wait on that one. All right, guys, what time is it? 2:38. Let me take a few chart requests. I'll keep the camera rolling here. And if you want to type those in, are you guys not seeing this? I know I'm recording it, so I'll at least give you that. You're not seeing it at all. Oh, rats. Okay, well, let's do this. I'm sorry. I apologize. I don't know what went wrong. I did everything the way I should. I assume I shared the right screen, but my technical prowess is not very good. But let me go ahead and record, produce the video. I'll put a link in the main room, and then you can at least watch everything that I've just been talking about to myself. All right. God bless everybody. We'll see you back in the main room in a little bit. Bye for now.